Our next question comes from Sourabh Mendiratta.
Thank you for joining with us today. My name is Saurabh, and I am a fourth-year student pursuing finance and economics at University of Toronto. I'm a former employee at RBC Capital Markets, and currently I'm managing a fund of $1 million of focusing on emerging markets. So my question is related to the fixed income markets. We have seen a significant fall in the fixed income security yields from the past 10 years. What do you think the next decade for the fixed income market looks like?
I gotta be consistent, just like the last question. I don't know. I'll walk through how I would think about that as an investor. But I would actually say for you guys, you're so lucky to be young. I'm not sure I'm the oldest person on there, but I'm up there. And I would say I would almost challenge the assertion that interest rates have been falling for 10 years. Interest rates have been falling for over 40 years. And if you want to see a bull market, please go look up the yield, 30-year yield in either Canada or the United States since the late 1970s. So yields have been falling for a long time, and that's because what are yields? Yields are essentially inflation expectations. So if you believe that there's going to be inflation, and what has historically driven core inflation, I think it's primarily been wages and the ability to pass on input prices to consumers. If you think inflation is going to go markedly higher, you would expect bond yields to go significantly higher. But as you go through, you mentioned that you're in fourth year. It's not really all that straightforward, right? Because if bond yields go higher, then borrowing costs go higher. And in an era where people have an enormous amount of personal debt, as borrowing costs go higher, it becomes more difficult to service your debt. And if you're servicing your debt, that makes it more difficult to buy other stuff. And if you're buying less stuff, that in and of itself is going to slow growth, right? So from my perspective, mostly as a consumer, as someone, I guess, in this industry, but as a consumer, I don't think yields are going anywhere this year. And again, I'm not the expert. It's hard to really see yields going significantly higher next year. For me, it's really hard to see yields going significantly higher anytime soon, just given all the different levers that have to be taken into consideration as to what drives growth and in turn inflation.